with Investify, and in today's video this is really special to me because we're going to talk about the market analysis, but besides that we're going to discuss how and when to sell a stock that you're owning and when to cut your losses short. This is a very important concept that I think most people need to understand, because once you understand when to cut your losses, you really understand risk management and start to think of investing as a business. So, the first thing, we're looking at the NASDAQ composite. It's still uptrending as we discussed yesterday. So, not many changes there. Things are looking great. Let's take a look at the S&P 500, and that's inching higher, so it's near its all-time high, which is the 291.74. So these things look pretty great, and as we discussed yesterday, a lot of these uptrending moves in the market are because of the mammoths, the tech companies, Microsoft, Google, Amazon, Facebook. They really are controlling a huge market share of the S&P 500. So, okay, let's talk about a stock that I'm looking to sell. And to do that, let's come to our Robinhood account. And as you can see here, one thing that I want to show you at our live Robinhood account here is that in the past week, we are up 2.19%. And it's been a nice week with or 2.2 now. But let's compare that to the benchmark that we're using, which is the S&P 500. And that's at 0.57%. And the reason being behind that is just because of our approach of investing in more of fundamentally strong companies, growth companies, ethically sound companies, and using AI to build that data to create opportunities for ourselves. And that's when you get returns like these. So the stock that I'm looking to sell that I own right now is DDD, which is 3D Systems. Okay, now as you can see right now, my today's return has been a positive one. It's 1.3%, which is great. And the total return on this stock is 51.5% per share. So if I put $1,000, I would have made over $500. Now, why is this so important, and why would a question that people would be asking is, why am I looking to sell this stock when it's made me over 50% return? It's only at $18 a share, and what's going on through my head, right? So let me just show you guys the real picture, what's going on with 3D Systems. So let's come here and let's choose 3D Systems. All right, and let's go to the fundamentals. What is the company about? It's essentially creating, prototyping, manufacturing systems to produce 3D objects from computer data. So they're a 3D company. I have no doubt in their ability to do well. They have very little debt, a pretty good market cap. The numbers look great, right? Even their book value is pretty solid. So the company looks great. But one of the things that I do is that there comes a point where I have to start looking at, okay, can I look for a way to get out of my positions and capture my returns. So what I'm going to do at this point is that instead of just getting out, I would be looking to kind of push my stop loss to about $17.45. So it's below the low that the stock has reached. And what's making me think about this is one of the patterns that I follow when I'm trading. It's, if you see that there have been a lower low here, because the low for last week was lower than the week before, and then this week the low is lower than the week before. Now, if next week it drops below this low, that is a huge sign for me that, okay, you know what, a downtrend is going to start. So that's why I need to push my stop loss to about 17.5 perhaps even, and just wait and see, because that happens, I'm cashing out, I'm still making good money on my return, and it's a great company. And down the road, when the technicals start to come together, I would be looking back for an opportunity. The other aspect of why I want to get out is that we're seeing this resistance level right here from where it's been pulling back. So that's why it's important to have a very solid stop loss in place that does not get impacted. And let's work on that now. Let's go to our 3D systems position right here, and we click on trade, okay? And we click on sell, and we choose the one share that I own, and then we select order types, and we go to stop loss. In this case, I'm going to put my stop loss at 17.5. So I am covering myself completely from a downtrend, and I'm going to click never expires. And this is how I have captured in all the profit that I wanted to, a good 40-45% profit. And now I am risk-free. At this point, if it goes against me, no worries. I'm still going to get out with profits. And if it continues to go higher, I can push my stop loss further up and just capture on those gains. So this is a very important concept of understanding how to limit your losses and how to protect your gains. And it goes hand in hand. It's one of the most important aspects of risk management, of trading. If you can really look at it from a business perspective, not just blindly invest and just wait for things to happen, but rather make things happen for yourself, that's where the real opportunities are. I hope you guys enjoyed this video. If you have any questions, feel free to comment, message, and if there's any confusion you have what to do and how to do, please let us know. We're here to help you guys out. Have a wonderful weekend. Take care, guys. This is Azam with Investify. Bye.